So hello guys, this is Anshuman Rao and welcome back to another video. So this video is gonna be about a trade breakdown that I have executed during London Open and during pre-New York and London Open during those times. So it's basically I guess it's around the trade. It's around 12:38 a.m. According to IST, Indian Standard Time, and now Wellington and New York session overlapping sessions are going on. So not enough volume in the market as of now. The volume has for the day it has already decreased and ended. So as you can see in the gold chart, there is not much volume in the gold. So the volume has decreased during this because the New York session is about to end in 2 hours. So volume has decreased. So during these times I don't trade much. So I trade only on during those times of pre-New York and pre-New York New York Open sometimes, but mostly I guess I trade mostly on pre-London and London Open. So during those times I execute my orders. So this video is going to be about a trade breakdown that I have executed during London session, during pre-London and London Open during those times. So we'll jump into the chart of gold. I don't have any, you can say, I can show you the funded next account. I usually I take my trades in using my prop firm. As you can see here, Wellington and New York sessions are going on. So I can show you my trade history. I can show you the analytics. So basically I will tell you the entry and exit point of the trade. What the hell is this? So okay, so this was a little bit glitch in macOS. So okay, so this is the account that I have been trading since 3 days. So initial balance is 6,000, so pretty much in a break even phase. So if you will see the trading overview and the trade growth view in the analytics section. So in I started with 6,000 on the day 2. I have pretty much in a loss. Okay, variable loss. Okay, still then November 30 and December 1 were the Saturday and Sunday, so no trades for the day. Markets are closed. On Monday I opened. First day was not good, pretty much still then in plus but not much. But today I recovered all my losses and a little bit of in a positive, but still then it's okay. So let me explain you the trade, how I entered, how I exit, and how I would have made you know X amount of money, but I only made a certain amount of money due to my mistakes. So these are the trade history. Today, yesterday was today is, as you can see here, Wednesday 4th December. So these trades, recent trades which I am going to explain you, are executed on 3rd December. So 3 3 3 3, this four, well, this four trades I am going to explain you, and these four trades are not taken in a separate setup or separate something else, but these four trades were only one trade because one trade was executed on the first when my I got a confirmation. Then second trade was was when the position was running in my favor, so I added more quantity to add up upon my winners. So this the so it became, number of trades became 4. So as you can see here, the gold, my entry point was somewhere around here. Yeah, here. So somewhere around here. It would have been very effective if I marked the entries and exits before starting the video, but yeah, it's okay, no problem. So there was a, in before explaining my entry and exits, why I took the entry and exits in the particular point, let me explain you my analysis. So gold on a daily chart was, overall it was a bullish trend, but you know not, you can see it was a overall bullish trend but not a strong bullish trend. You can consider it as a day ranging. Like in a daily chart, the market is around consolidating in a particular range. So daily chart is not, you can, in this scenarios like 1 2 3 4 5 6, in the last 6 days candles, you cannot predict, you cannot develop a confirmation bias. So daily chart was okay, it was good for drawing major levels like this. I got this supply zone over here, sorry, I got this demand zone over here, the support, and over here I got the resistance, which is the supply zone over here. So if the candle closes above this, if any candle, if any day a daily candle closes above this zone, so this now wicks will become wick fills, and there is a high probability for the price to cover up this whole clean range around here. After covering up this wick fills, which is around 108 pips of maximum 108 pips of wick fills, after covering this clean range of wick fills, and if it breaks out this blue line over here, which is the high of the wick fills, then it is more likely to cover around 600 pips of clean range on the left hand side. So this is the daily time frame analysis. But if we jump into the 4-hour time frame, now we have a clear market structure over here, in which the daily levels are completely respecting, and if it doesn't respect, we can refine it by shifting the zones over like this. You can shift the zone like this to execute perfect trades, like not perfect trades, you can say you can execute quality trades. Okay, that will be a good word, quality trades. So this is, so if the candle, if any day candle closes above this blue line, so there is a high probability for the price to cover up this whole range over here of 111 pips. And from here it might, from this zone it might give a trend reversal. But after covering this whole clean range over here, we will exit the trade. If this is the 4-hour time frame analysis, 4-hour time frame analysis is pretty much looking like this, which I am explaining it to you now. And if it also breaks this zone over here, it will be, most likely there are high probabilities for the price to cover this wick fill over here up till here, which is around 91 pips, which is a very good range. So in daily time frame, as you can see in daily time frame, we were just getting a clean, a clean, there were no no TP, no particular TP areas, no particular, okay, stop loss areas will be developed after the market creates the opportunities of entries. But you from the past, you can already decide the TP levels, like market has to cover now, like there are higher probabilities for the market to cover the clean ranges which were created on the left hand side. So on the daily time frame, you can see we have no clear market structure over here. But when we shift into a smaller time frame like 4 hours as compared to 1 day, which is a bigger time frame as compared to this is common sense. So yeah, we have a clear market structure over here. So this is one of the TP levels which is easy to target, and next TP level would be, I guess, this one, which is the weak fill over here. And if also the price breaks this weak fill high over here, so most likely it is about to cover up till this zone over here, which is the daily major supply zone over here. So most likely the price, there are high probabilities for the price to reverse from this zone over here, which is the daily major supply zone. So this is what 4-hour time frame analysis looks like. Let's jump into 1-hour time frame analysis without wasting any time. So in 1 hour you can see we are just consolidating, but so this was around we are just consolidating in 1-hour time frame. So this is the common rejection point, as you can see. So this is what I call range of depth, because there are no trades for me around here. Like I can plan trades on this, like most likely for a reversal trade, if price comes here, I would execute a buy order. If, like, according to the trend, if the trend is as you can see overall from here, the trend is bullish. So if I would be in this situation, I would mostly comfortable in buys. Like if I want, I can execute sells from here or somewhere around here, but I am more comfortable in buys around this zone because the overall trend is bullish. So I like to go with the trend. So mostly I trade breakouts and candle closings. And also I take a rare impulse entry. Like most commonly I take impulse entries on breakouts, which I have to reduce. This is one of my mistakes, so I have to work on them. And it's better to take entries on candle closings, or wait for the candle to close. So because this VIX right here, which is, suppose I'm creating a hypothetical scenario, if the price comes around here and it makes some, and it breaks this zone and the candle hasn't closed yet, and if you take a entry, so it can give you problems, because there are 1 2 3 4 5 rejections over here. So this zone becomes a rejection zone. As you can see, this zone over here becomes a rejection zone, and there are high probabilities for the price, if it breaks down here and it hasn't closed yet, so there are high probabilities for the price to reverse back and continue in an opposite trend. And because it is a, you can say it is a high respected support over here, because it has so many touch points, 1 2 and 3. So price is most likely to reverse from here if the candle hasn't given any confirmation of candle closing or something like that. So this kind of brings to our conclusion that why I took this trade. So let's jump into the trade, which I'm going to break down on the 30-minute time frame. There was no such market structure developed. It was around the entry point was around here, guys. So as you can see, there were no supports, there were no resistances. The resistances were around here, and it was a sell order. Let me show you the trade, the first trade of the day, which was around $23 of profit, and it was a sell short order. So yeah, as you can see here, it was a sell. And if we view this, open time was around 3rd of December. This time is around somewhere, I don't know this time zone, but it was around 12:30 or something according to Indian Standard Time Zone, in which pre-London, during those times, pre-London and London Open times. So this is all the details about the order which I have executed. So this order was executed around this point over here, this point over here. As you can see, we don't have enough market structure in 30-minute time frame, and we just have this resistance over here. And this resistance is also not valid because it has already broken out by this candle, and also the candle has closed here. So this is invalid resistance, so we'll delete it. So we basically have not clear enough market structure. So if we jump into the 15-minute, if we jump into the 15 minutes, we can see here a clear market structure over here, and my entry point was around here. Let me mark something. my entry point was around here. Yeah, so my entry point was around here. So as soon as the candle gave this closing of, and why? Because I have, as you can see, this support over here, and I drew this support considering this common rejections, and I consider them as a very good support, and it was time of pre-London and London Open. So there were I was creating a high probability setup which would you know give me a higher probability, so that I can lose less. There are less probabilities for me to lose. So as you can see now also, this candle over here closed, if you will consider this support over here, this is the present market, guys. You can see, like, my setup which I trade, it is happening live and it is working. As you can see here, this setup over here, this candle over here closed here, like which tends, like what I will say, due to this candle closing below this zone, out of this zone, the wicks of this candle become wick fills, and we are getting this clean move of 18 to 19 pips, very clean move. So yeah, this is a simple setup, but when we analyze using different time frames, it becomes more and more effective. So this was my entry point, and price, I have hold the trade up till here, but the thing is, I was adding to my winners, and my exit plan was around here, something like that. My exit plan was around something like that. It was here on in this zone. So I anticipated for the price to cover this whole clean range up till here, but it was a very good move actually. If we cover, it was a 44 pip move, guys. It was a 44 pip move, which this is one of my mistakes, that 44 pip move is, to capture 44 pip move, it is very good actually. If you are capturing more than 35 pip move, then you should book some partials, or if you are running in a good profit, just close full quantity, because capturing 35 pips and 40 pips in gold is also very good. You don't get to see these movements more often. So what happened was, I held this trade up till here. Then after a little retracement in this candle, I added some more quantity, and yeah, it was going good till this candle. But I also trailed the SL of this trade over here. I also trailed the SL of this trade. This was the first order, and somewhere around here was the partial, not the partials. You can say I added some more quantity. So the SL was of this trade, which I added some more quantity of. This trade was SL something around here, which was taken out by this bullish candle over here, you can see, because the trend has reversed. So I was stopped out for this trade around here, and my SL for this candle was around here, which was in a positive $23. So overall in this trade I made about $3 in profit, even though my running profit was $44, and I would have made $44, but still then I was only able to make $3, because improper risk management, and especially improper trade management. Because the mistakes were, I held for too much long period of time, which was not acceptable. If you are capturing more than 40 pips, then it's way more than good. What I will say, yeah, you can tell it way more than good trade, because capturing 40-50 pips in gold is not normal. It's abnormal actually, if you will say it in a, if you will, what I will say, if you will consider it, if you will give it a good word, then it's abnormal to capture 50 pips in gold, because it's one of the volatile market. So yeah, as you can see, but in the end we have covered all our losses, and we are in a pretty much break-even stage. So I will be posting videos of this fund taking I will be posting videos of this, funded account, and I will take trades, and I will post videos on the trades and trade breakdowns. And I hope this video helps you a lot in your trading journey of simple price action. So this was just a video journal of me taking these trades, and because journaling with pen and paper is what I find it effective, but I think the notes might get lost, and the journals might get lost. There are high probabilities of the trading journals which I maintain, it might get lost, but YouTube videos will never get lost. Like, I can access them whenever I want, wherever I want. So this was it for the video, guys. Hope you have got immense value from it, and yeah, if you like it, then just drop a like, and keep learning and keep trading. Thank you. Bye bye. Peace out.